All right. So a couple of you guys went to a big private lender event last week in Vegas, which I'm sure was really boring. Like there was nothing to do but just go to seminars all day. So what was Alex, we'll start with you. What was the big takeaway?
Some of the big takeaways were, now when you go to a national event, they're going to go through national statistics. So one of the big takeaways you're looking at is you're going to see a fluctuation and change in capital markets. Okay, so your price of funds, your cost of capital. How do you use that change in cost of capital while buying different types of assets? And I know I'm being very general because there's a big, broad conference with a lot of different type of lenders and institutions. So one of the biggest takeaways was you should still be buying while the money is out there. We'll get into that today because everybody's waiting for this crash like Jason was talking about. And when you can buy things for 30, 40 cents on a dollar, money is an issue. So still get out there and utilize that capital while it's available. But asset classes are still very strong. Single-family homes are still very strong. Commercial assets are doing very well. So everything was still producing very well, but it's just a time in the investment market to pivot, is what I took away from it.
All right. Kathryn?
Yeah. Similarly, I took away, we're not anticipating any kind of crash in the real estate market. What the types of loans you can get as an investor have changed, and the types of loans that make sense have changed, but you can still get loans. And in fact, the strange thing right now is, as an investor, you can get a loan for about 1% more than you can as a borrower on your own house. And that tells you that there is a lot of money out there looking for a home when that spread is only about 1%. And yes, underwriting conditions are changing and the rates are changing from day to day, but you can still get loans to buy real estate even with all the craziness. And if they thought the market was going to crash, that would not be possible.
All right, Zach, you guys just had your big Quest event. I'm sure rates and everything else were topic du jour, but what was kind of the big takeaway? What was the fervor there with all the attendees and the folks speaking?
So I mean, I'm kind of going to echo them. It's really that the market crash that everyone's been talking about simply just isn't arriving, right? We don't have the same conditions. While things are, they're rocky right now, it's not the time to hold your money put in a safe, right? If you have the ability to purchase an asset, do it. All right, put your money where you want to. The only difference is now where you're looking to borrow those funds.
Okay. And Rebecca, you work with mostly homeowners going in to buy like a house, to live in, that sort of thing. So what is their mindset right now as they're going in and staring down 6-7% interest rates? Well, is this the proverbial date the rate, marry the house? Is that what everyone's using these days?
Yes. I mean, unfortunately, a lot of people have just stopped, put it on a pause and a hold. I had a lot of people that were waiting just for house prices to come down, and now they're just waiting for interest rates. So it's put a lot of people off, especially this time. We used to encourage our homeowners, and we used to remind them that, hey, you can get your tax exemption, and you don't have to pay taxes next year if you buy this year. But since that has changed and you can actually do your home's that exemption the same year you buy, we don't have that. We don't have those people that are looking to purchase at the end of the year. So we're not seeing that. And also, my company is progressive in giving us tools in these times. So they were really progressive into giving us a tool. There's a loan product that is a seller paid buy down. So for the first year, you get 2% interest rate reduction. The next year, 1%. So they're going in at a 5 and a 5 1/4 or 5 and 5/8 and instead of the 7s and the 6s. So that's helping with a lot of the realtors, educating them that if you know anybody that's on the cusp, tell them we do have a resolution. And they're also, my company's really good about educating us, partnering with Barry Habib about what's going on and how to forecast and talk to your clients. They say interest rates are going to go down, right? But it's not going to happen tomorrow. They're really waiting. We're waiting on this recession because, like you say, what happens in a recession? Rates go down. Today's, purchases or tomorrow's refinances, but they're projecting probably Q1. We should hopefully see this. So that's our projections that we're getting.